Good evening, everyone, and welcome back to Finance Lingo once again. And this time I'm going to talk about this coming IPO HRNetGroup, which is already open for IPO. So let's not waste time. I will start off with the disclaimer. Okay, this presentation is provided to you for general information only and does not constitute a recommendation and offer or solicitation to subscribe for, purchase, or sell the investment product mentioned herein. Okay, so let's get started. Okay, so to obtain the prospectus of this upcoming IPO, just go to www.sgx.com. Go to company information, go down to the IPO's prospectus. Okay, once you click that, you'll come to this page. Then you'll see the HRNetGroup prospectus over here, and over here it'll show you the closing date of this IPO. So do take note the closing date is this June 14th. It's it's a Wednesday, and closing time is 12 noon. Okay, that's for the how to obtain a prospectus. Okay, so this is their website, HRNetGroup.com. I'm not certain why the investment relationship is not up, but you guys can go and visit their website if you want. So next we'll just start with the IPO. Okay, so this is the IPO. This is the prospectus. Here, what we are looking at is that this company is offering 89.482 million shares for investors this round. So apart from that, 85.682 is offered on the placement tranche and 3.8 is offered to the public tranche. Okay, so here we are. If you're going to the ATM to apply, you are actually balloting for this tranche, which is what we are looking at is just that they are only offering 5% of the IPO to the to the retail investors. Okay, so if you guys are interested in the IPO, unfortunately this time Philip did not have the placement. I know DBS brokers have the placement as well, and some Credit Suisse. Okay, so the issue managers as well here, you will look at Deutsche Bank and Credit Suisse and DBS and Nomura. Okay, so these companies will probably have placement tranche. Okay, so next we are going to I'm just going to zoom into this para 2, okay, which is very small. Okay, so I need to enlarge it. You guys do read this paragraph 2, it's pretty interesting. Okay, at the same time but separate from offering each of Aberdeen Asset Management Asia, Affin Hwang Asset Management Berhad, Credit Suisse Singapore branch, and Credit Suisse Hong Kong branch, FIL Investment Management, Meiji Yasuda Asset Management, Technopro Holdings has entered into a cornerstone subscription agreement with our company. Okay, so that's to say these companies they probably will not sell in the first 6 months of this IPO. Okay, so do take note of this. Okay, now I'm just going to zoom out a little bit. Now let's go on. So this is company involved in HR. They'll just look for talents and match them with the employers that where the employers are looking for. So from these companies, okay, these are their key brands. HRNet 1, Recruit Express. Well, this one a lot of people may come across this. I think I'm more familiar with this. And People Search Recruit First and Search Asia and People's First. So these are the trademarks under HRNet Group. Okay. So here when we go forward, okay, go to page 4. Okay, this company, their revenue for 2016 come out to 365 million, earning before interest and tax depreciation and amortizations come out to 59.5, and net profit attributable to owners of the company is amounted to $45.4 million. The EBITDA, earning before interest and tax depreciation after amortization, margin is 16.3, net profit margin at 13.3. Net of that, this is a very beautiful profit margins, and so same is the EBITDA. Yeah, okay. But one thing is really interesting here is that we are now in the June of 2017. So this is a full financial year 2016. How much profit have they made in 2017 is not known, or nor have they made any statement in this prospectus. Okay, so I'll give you an estimate later on. Okay, so here we are. This is the 24 years of proven track record of growth. This company have been growing and doing talent search for for the past 20 over years. And when we look at the very long haul years of from 1993 to 2016, we are looking at this growth rate of 31.6 for the revenue. And if you are looking at maybe a short-term range of 10 years, you are looking at 12.6. While you look at 2 years, it's only 2.1. Why is that so? Because it's already compounding rates of return. So all in all, I will say that the earning growth rates over a medium term, let's say 5 years, we are looking at generally maybe of 10%. Okay, so this is the revenue growth rates. When we look at the net profit came in very beautifully as well. So 39.5 for 20 years, 20 plus years, about 11 years for 14%, and 2 years at about 13.3. So net of net, I'll say that the net profit probably growing at the range of maybe around, I'll say the average of about 14-15% net profit growth. Okay, so I've said that this is very good earning growth rates for this company. So but net of net, although it's for about 14-15, I'll say I like to always give a very stingy and conservative approach. In this case, I'll probably give a 10% growth rates on to be more safe, to be on the more on the safe sides. So here we are at the opening date of the IPO, 8th of June, which is now is already on the 11th. The closing date is 14th of June, Wednesday, which is about 4 days from now, and it commenced trading on the 16th of June, which is Friday. Alright, so do go to any of these ATM to apply for the shares if you are interested in this company after I go through them. Okay, I'm not doing any recommendation, but I'm just telling you what I think, what I found, and what I've seen, and what I've derived from their prospectus alone. Alright, so let's go on forward. Now I'm going to go to page 35. Okay, so here we are based on the Ministry of Manpower records. The number of licensed consultants in key players in Singapore based here. Okay, so HRNetGroup have the highest bigger share here. Okay, next we have Tem Holding, Randstad, Adecco, Kelly Service, Page Group. So what you can see here is that HRNetGroup has the highest market share. Okay, I do have a ex-colleague working in Adecco, so it's pretty amazing that HRNetGroup is the largest player here. Are we looking forward to some more listing from the next 3 companies? Is really an unknown factor. Okay, so they are the largest market player here. Okay, next we are going to go on to page 46. Okay, from here we want to know what is the revenue diversification of the customers for this company. So what we can see here of the top 5 customers, they only contribute about 14.1% of the revenue to them. So net what we can derive here is that this company have a very diversified customers base. So that's to say that we have least concentration risk in case of bad times. So this is very diversified customer base from my experience. All right. So next we are going to page 79 on the use of proceeds. Okay, this company using a proceeds for business expansion. So less of all the listings fees, we are looking at they're using 95.3%. Okay, there's a typo here on their prospectus. It puts sense, it's 95.3%. Okay, of their gross proceeds for business expansion and potential opportunistic acquisitions. So okay, here they are. Only 8.22 is used for all the listing fees, etc. And the rest, okay, they are going to raise an estimate of $165.8 million. This all this money will be really going forward to expanding this business. So hopefully the net profit increase over the next few years. Okay, so this is a good IPO. You know, I like to see IPO that use money for such purposes. Okay, next we are going to go to page 81. Dividends. You guys can read through here. I'll just jump straight to the most important point. Okay, so on to the last paragraph. Okay, our directors intend to recommend and distribute 50% of net profit after tax for the financial 2017 and 2018. Okay, this is very good news. It means that this company is very rewarding to the shareholders. Okay, so what I did here was that I took the net profit. Okay. Okay, I think I'll just go to this later on. So what we can see here is that they are having a 50% dividend payout. I'll go through all these numbers later on. Okay, next we are going to page 82. Okay, so this is the market cap, the total shareholder equity after the IPO. Okay, after the IPO, we are having looking at 279 million of equity. So from here, actually work out the price to book earning ratios to double check. I'll show you the working later on. And quite amazingly, this company is trading a very high price to book ratios. In my working, I worked out that it's actually trading at 3.29. So this is a very high price to book. So on the page 84. Okay, you guys can also see here. Okay, so the book value after the IPOs, okay, is only 27 cents. So when you're buying 90 cents, you're actually trading at 3.29 ratios. So do take note of that. This company you're buying above book value. Okay, but nonetheless, I do think that this is still a pretty decent and good IPO. Okay, so next we are going to page 247. 247. Okay, anyway, just to let you guys know, the company I do have some employee shares, options plans, share growth plans. So it may be a little dilutive towards for shareholders, but nonetheless, such plan is to encourage the employees to to work harder and to increase the shareholder value. Okay. Next, I'm just going to, I think I captured wrong numbers again. Okay, so once after all the post IPO, okay, so we are looking at 1.022 billion shares outstanding. Okay, so we'll take note of this. I think I wrote wrongly over here. Okay, next we are going to page 256. Okay, this one is a little tilted, but I'm just going to come to this important point here. Okay, this is the board of directors as shown. This 5 person: Peter Sim, JS Sim, Adeline Sim, Sin Bun An. So it's more like a family business, and what we can see that pre-IPO, okay, they are owning 97.6%. Okay, but okay, after the IPO, they are looking at about 91, if I'm not wrong. Just let me get back to this. So okay, so we are going to page 259. 259. Okay, I think this one is more easier to understand. Okay, after the IPO, I know it's a little difficult to read, okay, but we just want to go straight to the point. The public shareholders are basically holding 8.85% of this company, okay, whereas the cornerstone investors basically are the funds. They are holding 10.28%, and Vendor One, okay, this is owned by the Temasek. Okay, I'll explain to this further. So whereas other shareholders hold 4.52. So what we can see here is that after the IPO, okay, the major shareholders is still holding a large portion, and the public is only holding 8.85% of this company. So the main bulk of it still goes to this main four substantial shareholders. So net of net, yes, we are looking at after the IPO, they are holding 74% of this company. So the captain is on board. You guys do not need to worry about the company crashing or collapsing. Okay, even I myself think that 5 years or 10 years down the time, this company could be even be in the STI components. We really do not know, but that's just what I think. So I'm just next going to move on to page 260. So that's now talking on Vendor one of the shareholders. Okay, so I'm just going to go straight. Vendor One is a private limited company, okay, managed and controlled by Hikonia Capital Management, which is an investment company incorporated in Singapore, wholly owned subsidiary of Temasek Holding Private Limited. Okay, so they have also went through this company earnings and visited companies probably and deemed that this is really investment grade. So the big funds players are here in this company as well. So next we are gonna go to page 262. This is page 262. So the share capitals and shareholders who are the players in this shares in this IPO as well: Aberdeen Asset Management, Afening Huang Asset Management, and Credit Suisse, Ex Japan, and FIL Investment. Okay, Meiji Asset, Techro Pro Holdings. So what you can see is that there's a lot of fun in these companies. They are they are really holding on to these companies, and they are very interested to invest in this company. Okay, but nonetheless, I do need to emphasize, they only say they are committed to hold for 6 months without selling it. So within this 6 months, if the share price did go up to a very amazing level, please sell because they are holding on a huge fraction of the shares. Okay, so what we can see, okay, here we are. Now I'm just going to bring all these numbers back. Okay, so I went through these points. Now I'm going to go through here. So based on the post IPO, they have 279.7 million of equities divided by share outstandings. Each net asset value will work out to 27 cents, which is just now what they work out is the same as well. So the price per book ratio is 3.29, which is relatively on the high side. But nonetheless, we are looking more on the earnings rather than on book value for this company because this is a very net high profit margins company. Okay, next on the dividend policy, they are giving a 50% payout. Hence, based on the estimated earnings, I actually estimated the next financial 2017, the earnings to be around 44.44 cents. Okay, correction is 4.4 cents. Okay, but since they're only paying out 50% net profit, we are working the dividends per share is about 2.2 cents. So henceforth, with 2.2 cents divided by 90 cents, we are working out dividend yield of 2.4, very close to CPF bond rate, but this is a growing company. So 2070 could be 2.4, 2018, 2.6, okay, maybe 2030, you are looking at 5, 6, 7, 8%. Okay, now the major shareholders from page 258 stood at 74% after the IPO. Okay, so this is how I derived the 0.44%. So I'm just going to go through it once again. Okay, so from this page, I work out the net profit for 41.085 million shares. So based on the pre-IPO, okay, there's 767 million shares outstanding with the earnings per share of 2016.41 divided by the number of shares. Earning per share work out to be 4.01 cents per share. Okay, so assuming a 10% growth rate for the year 2017 net report, because they didn't mention anything about 2017 earnings as of in the what's mentioned in the prospectus. Nothing was mentioned. So I just estimate the earnings, assume a 10% growth rate with the earning per share times 1.11, we work out to be the EPS of about 4.4%. So plus minus a bit, it should be about there. Okay, because this, I mean, I don't expect a company to suddenly make 30% over with 1 year or so, but 10-20% growth is pretty decent estimates. Okay, so from this earning per share, I work out the share price earning ratios. So at IPO price, okay, assuming this earnings, the share price earning ratios is already at 20.4. This is already equivalent to a fair value at the IPO price. Henceforth, I comment. Well, I think that the bankers or the IPO manager did a very good fair value. It's very difficult to extract any discount from him, but of course they do have a good growth rate. So if the share price don't move after listing, it's moved in 2 years. Okay, I won't say it's going to be a very rapid move because it's listed at a high price at 90 cents, and this is quite a big company. Okay, the market cap is expected to be very reach $1 billion. So this is a very big company. Okay, so if the IPO is the opening date, you start trading at $1, the P we are looking at really 22. Okay, personally, if I think that you can get 90 cents during the first day, you could look to liquidate at $1. I really don't know, but I just make estimates. So if it does go to 1.1, the P is already reaching 25. So henceforth, I think that share investors should really start disposing of the shares, because for now the P is really reaching 25, and that's very high. Okay, I can get a lot of shares trading below 25 with the same amount of growth rates. So if it does share price do reach 1.1, which is about 20% above the IPO price, please start liquidating the shares. That's just based on what I think. Okay, I'm not telling you to liquidate, but if I were you, I'll liquidate. Anything above that, immediate liquidation. That's what I think. Well, at the share price of 80 cents is probably a good acquisition point. Looking at probably 3% or 2% plus dividend yields or reaching 3. Okay, so this is what I think this price range is going to be. So I think we just maybe start at 91 cents, and for 2 weeks later it's just going to be trade on 1.1 or 1.05. So I'm not expecting explosive growth of the opening trading day, because the listing price is like pretty near the fair value. Okay, so all in all, I think I just want to go back to the most important. It might go up to 1.1, because here we are looking at here is that this company had seriously tracked proven record of growth. Hence, a lot of people may just really jump in the wagon hoping to catch some big shares, price appreciation. But do take note of the share price earning ratios. Okay, the net profit also growing very beautifully. So a lot of investors may just really buy on some madness. I really don't know, but I do think that there's 10-20% chance maybe that you can reach 1.2, and from here on I think a lot of the private investors will probably start liquidating. This is what I think. I really do not know what's going to happen, but these are just what I think. So next we're going to go on to one of the famous blogger here. So what the blogger is thinking, this blogger, okay, he thinks likewise. I'm just going to jump straight, you guys can read through his Singapore IPO blogspot.sg. Okay, so similarly, he does share the same point that the dividend yield is about 2.4%. Okay, he personally give it a 2 chili ratings. Okay, I'll think that it's a pretty good fair ratings. It doesn't deserve a 3 because of the high fair value and the price earning at 20.4. So, but nonetheless, if you manage to get IPO, you probably can sell it off at $1, so it makes a 10% gain. So it's up to you guys. Okay, so this is what I think, and all in all, you guys can go read through his blog. Okay, I think that's all for me today. This is a pretty decent IPO, so maybe 10 years or 5 years down the time, it may be in the SCI components. So for 2017, this is the best IPO I've seen for 2017. So that's all for today, folks. Okay, so if you guys want to buy any shares and open a trading account, you can drop me an email or call my office. So do drop me an email, I'll reply to you and guide you on how to open a trading account. Okay, so this is Roland Bavincom from Singapore. Okay, so that's all, folks. So go to ATM, guys. Bye.